Good morning and welcome to Forex In Four. Today is Wednesday, September 28, 2011. Okay, we're starting out taking a look here at the euro, as that's obviously what's been dominating the headlines of late. And you can see here, euro was moving a little bit higher, had a little bit of a pullback, and now we've come up just against a little bit of resistance here, just shy of 136.70. All right, pulling back a little bit with a little bit of an oversold stochastic here. This is the hourly chart we're looking at, and we're just trying to sort of put a timeline together for what's going on with the euro. Now, there's not a lot of economic fundamental data out this week for various countries around the globe. They're very sparse, so obviously all eyes are focused on what's going on with this euro debt crisis. Basically, two things that are driving market sentiment right now. It's euro debt crisis and the U.S. economic malaise that we have. Some might call it, say that we're still in a recession. Perhaps we're facing double dip. Whatever you want to call it, doesn't really matter. Okay, but we know that the economy here in the U.S. isn't doing so hot. So let's focus our attention to the euro for a second and see what's going on. So euro was moving up nicely. All right, started off the week that way after we got through the weekend with no immediate calamities. All right, and then you can see yesterday afternoon we started selling off here a little bit as there was some fear that perhaps there was going to be some problems getting this EFSF ratified. And yesterday there was a vote in Greece. All right, Greece agreed to raise property taxes there, which is what they had agreed to do in the deal that they made back in July. Well, now you have to have all these various states within the Eurozone, these different countries, okay, ratify the EFSF bailout deal that they said. So, now they're actually having these votes. Okay, and they've known about this program for some time, but they've come back and they said, well, wait a second, you know what, the numbers that we were using back then, well, they're a little bit different today, so, perhaps the same thing doesn't apply. So let's go back to the drawing board and re-look at this. And, they're running out of time over there. And, I have to say that I agree with President Obama when he tells these guys, hey, listen, get your act together. You're scaring the world. And obviously they push back and say, well, look at your economy. You're no great shakes either, which, of course, is also true. But it doesn't change the fact that they are dragging their feet and that the overhang from this crisis, okay, is weighing on the global economy. So anyway, Greece did what they said that they were going to do. All right, now they're sort of voting in all these different areas. So Estonia, I think it was, said, okay, we agreed to this. Now we're waiting on Finland. And why these votes weren't already passed before, and just said, listen, okay, here's the deal. If Greece does this, if boom, we agree to do this. And that's it. You know what? They should have ratified this a long time ago, but instead they keep delaying it. The numbers keep changing. Every day they delay it, guess what? A new number's going to change. Wait a second, the number's more. Why is there more debt there? Well, probably because of interest payments, which are tacked on from that period of time. I mean, it could be any number of things. The bottom line is this: either decide to bail them out or don't. But whatever it is, be definitive about it and get on with it. All right, so now they're waiting for the Troika to come back, the IMF, the ECB, and the European Commission to come back with their findings, and then we'll have another vote. And this thing's just dragging on, and that's what's weighing on markets. So they're still hoping that they're going to go ahead and ratify the EFSF, that Greece is going to get its next tranche of payment. Okay, but right now credit default swap market is pricing in to a very high percentage. I think it's somewhere around 92% that Greece in fact will default. So some are saying that's a foregone conclusion. Not so certain, I mean, at the end of the day, what's the total debt? Like, how much is it? What can they do about it? And these guys in the Eurozone need to come up with a plan here. But in any event, you can see that we're sort of trading this range here, about 138 to say 133.5, 134. All right, we just stalled just shy of the R1 resistance here on the daily pivots. So that's what's going on with the euro, and we're going to be waiting for this news to come out as these various votes happen and things like that. There was some news earlier. French domestic GDP numbers came in as expected, a little bit better actually for the year over year, 1.7% versus 1.6%. Later on this morning, we're going to get U.S. durable goods orders, which that could be significant. They're actually expecting a decline because they had a pretty big number last month, which was a gain of 4.1%. That was unexpected, if I recall. So they're expecting a decline of 0.5% for the month of August, and we'll have to see what happens there. So, I mean, the data this week isn't really that much or that big. We're talking really more about the risk themes coming from the Eurozone in action. So that's what's happening with the Euro. Let's take a look at just some of the other pairs going on here. Okay, we'll see Aussie. All right, Aussie, the chart looks very similar to Euro, and that's because, we know that Aussie and the Euro have a fairly high correlation to one another, but we're sitting up above the daily pivot right here, all right, about 99 cents, just got shy of parity a little bit earlier, and I could see us getting back there with a little bit of good news out of the Eurozone. All right, we'll take a look here. Well, you know what, let's do this. Let's look at the S&P 500. So S&P 500. Okay, it was on its way up here. It's climbing higher. All right, we got just to that daily pivot at about 1194, pulled back, and right here, this level 1168. That's been a level that I've been on for some time. That's been a very critical area of support and resistance. You can see it's acted as support so far. We've done a little bit of a bounce off of that, and I'll just show you right here. You can also see that the Fibonacci retracement level for this move is just about at 1163, say 62 and a half, to keep it a round number. So that's, we've got the S&P going there. Take a quick peek at gold. All right, gold's sort of settling in, moving sideways now. People aren't sure what to do with gold. All right, is it a safe haven currency, or is it a safe haven asset rather, or is it an alternative currency? Is it just something that's going to move adverse to U.S. dollar? All right, dollar goes up, gold goes down, vice versa. So it's hard to say what's going on with gold, but it's starting to flatten out right now, and it's starting to slow down. We've got this 1700 area as a bit of resistance here for gold for a little bit. Let's take a quick peek at the pound here. Oh, where's the pound? Pound, doing the same sort of deal. We've had the higher move up, and we're sitting above the 156 level. You know what? Let me look at the pound over here. This is going to be a little bit better, I think. All right, we'll see the pound. Okay, also sitting on daily pivot, and that acted as support here, just above 156. Sort of same charts as Aussie. Now, if we can get up and breach this 157 area, and perhaps not put in a double top, then we could bounce up to the next leg higher here for pound. All right, but let's look at dollar yen here. All right, yen's been strengthening a little bit, dollar a little bit weak, and you can see the range that's been happening, pretty much 77 to 76. Very tight range for dollar yen. Again, we keep saying anything under the 76 level, and that's going to encourage perhaps more rhetoric about intervention from the Bank of Japan. So we're going to keep an eye on that. We'll look at dollar CAD here. Dollar CAD, okay, got back up over parity here. And, that's a move that happened, I don't know, when was it? A little bit last week. All right, we're sort of playing around here in this 102 area, which, is a little bit of dollar strength. So we're going to see if maybe we retreat back down towards parity. All right, but we're going to keep an eye on dollar CAD, see what's happening. There's actually some news out on Friday for dollar CAD. What do we have? It's in Canada. It's going to be the GDP figures for Canada. So we'll see what happens on Friday with that, but that looks like it could set up perhaps for a little bit of Canadian dollar strength, which would also coincide with risk themes. If the Eurozone can ratify the ZFSF, they can sort of get their act together, come out with some more clarity, whatever it's going to take to get things moving over there. We can look here, Euro Yen. You can see that we just had a little bit of the sell-off overnight, and essentially what happened is that we had some yen strength because we had Asian markets selling off a little bit overnight, and basically what happened is if you look at how the S&P 500 closed, all right, there's a correlation that happens, right, between U.S. equities and Asian equities overnight, and typically how U.S. markets end, not exactly what the number is, but how they end will carry over into the Asian markets. So essentially what had happened is you can see that S&P 500 was moving up steadily all day, and at one point was up about 25 points or so, and then all of a sudden, boom, it just gave back in the last 45 minutes a good chunk of change there. So that sort of set the tone for Asia, and it wasn't, the market still finished up a lot higher yesterday, okay, but the actual sell-off from the peak, all right, caused some selling overnight, which gave us a little bit of yen strength, and then you can see that euro weakness happening there with euro yen. So it looks like, if we can eclipse this area right here, the 104.75, get up to 105, we could be moving higher, but we're starting to see some stochastics overbought a little bit on some of these pairs, so perhaps maybe a little bit of a pullback's in order before we get the next bounce. So, that's really what we're looking at today is I'm not even going to get into the U.S. economy because right now, you haven't heard anything from Congress. The president's out doing his fundraising for his next election. Really not a whole heck of a lot going on in Washington, D.C. The data's going to trickle in, albeit slowly, and yeah, we know the U.S. economy is weak, but if we can get this euro debt crisis somewhat, I don't know if there's ever going to be an actual solution, but if they can just get some final certainty to it for whatever it is they decide to do, then perhaps we can go about the business of trying to fix our economy and things like that. I mean, we should be doing it anyway, but with the risk in the markets, it's a lot more difficult to perhaps do things that may be more difficult here if there's going to be some sort of shock coming from the eurozone. So in any event, just keep your ears open for this news as it comes trickling in. I'm watching the television. I've got the volume on today. Actually, I usually don't have the volume going, but today I'm gonna just to hear breaking news. Euro does this, blah blah. So anyway, that's what I've got. Good trading to all.